You're listening to The Money Hour with your host, Tina Mitchell, and co-host Keelan Harvey on Alternative Talk AM 1150. Now, back to the show with local mortgage experts Tina Mitchell and Keelan Harvey.
Welcome back to the Money Hour with your host, Tina Mitchell.
And co-host Keelan Harvey.
Your local mortgage experts right here on 1150 AM KKNW, our Saturday, January 19th show. It is a great day to talk about money, and that's what the show is about, how to make money, save money, have a better quality of life for you and your family. If you're hearing our show at a different time or day, you are listening to a rebroadcast. To answer any questions to the guests that we have on the show today, please call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. In studio right now, we have Austin Chapin with 360 Credit Consulting. Today, you're going to learn all about credit restoration. Austin, thank you so much for coming back in studio. It's always a pleasure to chat with you about how to improve credit.
Yeah, thank you very much for having me back in the studio. I always enjoy being out here.
You're welcome. And a little bit about Austin. Austin Chapin with 360 Credit Consulting is a regional sales manager for the Northwest region of the U.S. He is 25 years old. Oh my golly, you're half the years old that I am. And when he's not working, he's golfing, working out, disciplining new habits into his routine that he believes will contribute to success, and most importantly, spending time with his friends and family.
I like that. Austin, let's start with your title and what exactly are your responsibilities in your role for helping people repair credit? What do you do?
Yeah, so specifically, I'm a regional sales manager of the Pacific Northwest. I travel out here every other week to the Washington area from Denver, Colorado. However, I'm a jack of all trades. I'm a credit consultant, credit expert. We definitely handhold the clients and help them get up to the score that they need to be for whatever financial matter that they want to be accepted at.
So, Austin, the biggest issue or challenge that you see in credit repair?
The largest issue that I see with credit repair are people trying to fix it completely on their own. Yes, that is something you can do. However, there are a lot of hurdles you have to jump. There's not a one-size-fits-all for it. It's definitely not a cookie cutter, for lack of a better term. So reaching out to an expert like 360 would be highly advised.
And, you know, it's funny that you answered that, because I actually put that down for our bonus question, because that is the biggest issue that we see in the mortgage space is clients trying to save money, which ultimately they are not. They're spending a lot more by not being able to get that required credit score, possibly missing out on home ownership altogether. So such a great point.
Yeah, a lot of myths, too. People think they're experts, and a lot of times they're just noise, right, in our industry. So you got to be careful where you're putting your effort and especially your money towards your credit. That's a big deal. So, Austin, you could imagine that we get courted quite a bit in the mortgage business by credit repair people, and I think they're extremely valuable. But you guys are different, and tell us a little bit about that. What makes 360 different from other credit repair
That's why you're
companies?
here, Austin.
Yeah, so specifically in the mortgage industry, two of the largest issues we do see with credit repair and, you know, who you want to work with specifically. Are these people going to return you back as a mortgage lender a loan? And what we find as failures in it is client participation, and clients falling into this dark hole where they end up going to their local lender and you never hear back from that client again. So in 360, we have actually found a way to overcome those obstacles. And that's our follow-up game. We're reaching out to these clients 30 days, 60 days, 90 days. We advise you as loan officers as well to touch your clients 2 times a month, maybe once a month. That 20% of your touching can bring you back 100% of the award as long as we're keeping that kind of seat underneath them a little bit warm, the client will end up back into your hands.
So, Austin, how do you recommend that people start in the process of fixing their credit?
So, like I said earlier, there is not a one-size-fits-all. Contact me. I'm available at 303-550-4753. We can break down your finances, your current credit card debt, medical collections, divorce-related issues, bankruptcies, and etc. And trust me, I promise you that if that dark cloudy sky comes over and you don't think there's an option to get back into that home, we are the ones that will help you get there.
Yeah, I love that.
I like that. So, and really, credit's becoming more and more important. I mean, with technology and things, you know, for jobs or, you know, renting, purchasing, buying anything, you know. So, Austin, can you fill us in a little bit more about that?
Yeah, outside of just buying homes, we just saw a new stat that 1 in 7 employers actually have the ability to pull your credit before they decide to employ you.
Yeah.
And we're actually finding 1 in 4 people are getting denied that job due to having a poor credit score.
And if you think about it, it does it makes sense there, because how you manage your money is going to also give an indicator of how you might manage your space where you're ultimately getting looked at as far as employment. So, Austin, what about credit card advice? Is, when you have somebody asking, what should I pay off first? What is your advice there?
So typically, if you don't have an open and active credit card, you're actually losing out on 30% of your potential credit card score. Now, with that being said, people may think that if they have a higher limit on a credit card, say $1,000 limit or $100 limit on another credit card, that they should pay off the one with the higher limit first. However, what it is dependent on is the ratio between your balance and your limit. So if you owe $500 to that $1,000 credit card, or if you owe $50 to that $100 credit card, we would advise you to pay down that $100 credit card if that's more affordable for you for that $50, because then you'll get more bang for your buck.
That makes a whole lot of sense. So I know what I would say to a client that wants to go get like a department store credit card before buying a house. What would you say, Austin?
We just saw this happen. It was Christmas time. Families would go out shopping for their loved ones. They would go out to Kohl's and spend, $500 and get offered that department store credit card to get off that 20%. However, in the mortgage industry, you guys have seen this happen firsthand, where a client does, and they completely demolish their length of credit history. That can take a 10-year length of credit history and nearly cut it in half down to 5, which would damage your credit score in turn.
Yeah, and on the mortgage end of it as well, whether you're opening a new card, if your debt to income ratio is fine, you're at the highest credit score bracket. It's not just that; it's the fact that you're in the middle of something, and when a soft pull is done prior to funding a loan, and there's a new credit card that's been open, then it has to go back to underwriting, go through the process again, and so you're losing that time, and it could affect the actual closing date. So a lot of things to be careful of there. Austin, can you break down the credit brackets and what is considered an excellent versus poor credit score?
What I term as excellent, I would say, is over a 700 credit score. What I'd coin as poor is beneath a 620. However, there's always room to grow. There's not one person that can have that perfect credit score at an 850. And as you guys can speak on, the buying power with having a higher credit score is only going to allow someone to get more buck for their home.
Yes, yeah, and for a mortgage purpose, on the best interest rate at 740, so that's what we would consider excellent for that best interest rate. And yeah, that 620, I mean, you can get loans when you get into like the 580, but once you get under that 620, it's going to have a pretty big impact on the interest rate.
Exactly.
Yeah.
So I get this question all the time, Austin. What about collection accounts? What are your thoughts on there? How do we deal with those?
So very, very often we hear about debt collectors reaching out to these clients. Now, what we find is the older the debt may be on a report, say someone has not paid off their debt, we have to look at the date last active. When was this last time a payment was made on the collection? If it was a couple of years back, it may be worth investigating before you do make that payment and update that date of last activity on the credit card.
Well, and Austin, isn't it true that if you have a collection and you pay it off, it doesn't do anything for you at that point because it's already dinged your credit? Is that true?
Yeah, it actually can do more harm than it can do good.
Because you've lost that credit history attached to that collection account.
Exactly.
That can be devastating. And it's those myths out there or the common sense. Usually we can follow our common sense, and there's no common sense to it. It just doesn't make sense that it's better for you not to pay off that collection. So I always advise clients that if it does have to be paid off in the closing process, we're going to wait and take care of that at escrow and paid it directly through escrow so that everything has been completed at that time, because, yeah, that's just the craziness. So, Austin, talk a little bit about the Fair Credit Act.
So underneath the Fair Credit Reporting Act, us as consumers, we are allowed to dispute and investigate any piece of negative or derogatory information. The credit bureaus then have 30 days to respond back to our investigations that we want to hear. Now, what we have found is that if you have 7 out of the same 9 social security numbers, or the first initial and same last name as someone else, we'll say, for example, a Travis or a Tracy Wilson, you're prone to having these identity errors. Now, the credit bureaus underneath the Fair Credit Reporting Act are not responsible for finding you and saying, hey, Tina, you have an identity error on your report. It is up to us as a consumer, and we will never know that unless we do a dive into our file. Mm-hmm. So I highly recommend that you do reach out to us here at 360 Credit Consulting. Once again, my name is Austin Chapin, and I can be reached at 303-550-4753. One of our experts will gladly walk you through the process and help you get up to that score you need to be, so you then in turn can get a home from Tina out here in the near future.
Thank you, Austin. I want to go back to the Fair Credit Act, because a lot of times people think, well, if there's nothing that I did have these lates and I did have these issues on my credit, but it's not whether or not it's an error or a mistake. It's how it's being coded on the credit report, whether it's in violation to your rights as a consumer. So that's really what Austin and 360 Credit can do, is come in and take a look at how those things are getting reported, and also make sure they have the proper documentation, which most of the time the creditors are not keeping that, and then these things have to be deleted and released. Is that correct, Austin?
Yes, absolutely. So the credit bureaus are just responsible for holding that information. They are not responsible for what your creditor, say Capital One, is reporting to them. Mm-hmm. They're just responsible for displaying that and then generating an algorithm to give you your high, mid, and low score. So all their information has to be concise and verified that is you. You are the one that is responsible for that collection or for that positive payment history.
Mm-hmm.
So, I mean, I alluded to people trying to be their own experts and misconceptions. What are some of the misconceptions that you often see, Austin, with your customers?
Probably some of the largest misconceptions, I'd find it in paying down your credit cards. When you should pay it down, people may say, oh, you max out your credit card and then pay it completely off. You'll gain the most points there. That is a misconception. Truthfully, you need to always be utilizing your card and keeping a small balance on it. The smaller, the better.
And in that situation, too, it can be devastating in the middle of the closing process, because you don't know when that is going to get pulled on the credit report. And then, just as Austin, you'd mentioned before, that ratio of where you want to keep that amount to.
Yes, exactly.
I got a curveball for you, Austin. So a lot of people, if you have a credit card, it's not like a first through the 30th cycle, right? They report randomly at certain credit dates, right? Like, so my credit card reports on, let's say, the 25th, and I have it maxed out at that point, and I think that I pay it off every single month. If that percentage is higher than 30% at that point, it's actually damaging your credit, right?
Yes, it is vital as a consumer to know whenever your credit cards are reporting. Therefore, check out your credit card statement so that you can see the exact date that it will be reporting to the credit bureaus, because you may think you have that balance paid down beneath 30%. However, it was just over 50% and you thought it was paid off, but that date is not the same current one that you believe it should be at.
Yeah, Austin, great conversation with you here on the Money Hour. Every time you step in studio, it's always a pleasure to have you here. And thank you, too. I want to give a shout out for being at our Power Hour Lunch and Learn yesterday that we did for our real estate expert professionals, and sharing a little bit with them. For our agents that are listening out there, you guys as well need to have a great credit repair expert in your pocket ready to go for those clients that have challenging credit. So, Austin, thank you so much for everything that you do for us.
Thank you so much for having me.
And coming up next on the Money Hour, time to even out the playing field. Jebediah Gardner with Gardner Global, right here on 1150 AM KKNW after the short break.